All right. Okay, everyone, thumbs up. I know you guys can hear me, so thank you guys for joining us. We're going to get started 6 o'clock now. Thank you, everyone who registered, and it's on time. Your time is really valuable to us, so we're going to get started right away. So welcome to today's first-time homebuyer workshop. If you've attended my event before, welcome back. Thank you for joining us. And this is your first time. The goal for today's webinar is going to be to talk about different down payment assistance programs that you may be eligible for, or perhaps that you don't know that's out there, that's going to help you acquire your home a lot faster versus waiting to save additional money. Okay, a little bit about myself. My name is Luz Lluncor. I'm the branch manager at New World Mortgage. We are a division of American Pacific Mortgage. American Pacific Mortgage is a nationwide company. We are licensed in all states of the United States, so we could do loans out of states, and there's different programs available for you if you are thinking about relocating. This is my 25th year in the lending industry. It has been a wonderful experience to serve many first-time homeowners like yourselves to be able to acquire their home through different down payment assistance programs. I am also a Freddie Mac Credit Smart facilitator, and what that means, if you are having challenges financially, increasing your credit score, just managing to save money, you like to participate in one of these programs that we host on a quarterly basis for just 12 families. Please DM me if you have a friend or family that's also interested. Let me know how I can help in the program. It just talks about financial budget and literacy when it comes to a first-time buyer. I am also CalHFA Preferred Loan Officer, and what that means is we just fund and host a lot of webinars and workshops, and we handle a lot of transactions for CalHFA. I am located in the city of Downey in California. So if you're nearby, Orange or LA County, you'd like to stop by and do this in person, we also accommodate in-person appointments. But knowing in today's crazy world, a lot of our applicants are applying online. Feel free to set up a call also with me if there's, something that we didn't cover in today's webinar. Okay. So we have an agenda for today. So we're going to be talking about what are down payment assistance programs, types of down payment assistance programs, the benefits of the down payment assistance programs, the 3 options that we talked about in promoting this event, and also some of the benefits. So every down payment assistance programs does have different criteria. So we'll show some samples of some of these programs so you can learn a little bit more if this is something that it fits your needs and also your budget. Eligibility requirements, we'll talk about what are those things that you need to be eligible for these programs, the items that you need to apply, and the application process. We're going to talk a little bit about common misconceptions too about these programs, especially if I have any realtors joining on today's webinar. We often hear from a lot of listing agents that, down payment assistance programs take longer than usual. Their risk of them not closing. So we'll talk about some of the myths and how we could, break through those myths when we're presenting offers. And then some key takeaways, and then we'll go into Q&A. If you do have any questions, please just include them in the chat. I promise to try to get through all the questions as possible. Don't be shy. Share any comments or any questions that you may have. All right, let's talk a little bit about down payment assistance programs and what they mean and the difference between down payment assistance program. And the world of online and ChatGPT, it can get a little bit confusing which program is the right one for you. They're not all the same. They don't all have the same income or credit criteria, which we'll go through today. But let's talk about a little bit about the different types of down payment assistance programs out there. And, typically when people look for down payment assistance, they're looking for free money, which those are your grants. So grants are not repayable funds. Okay, these are provided to you to assist you with down payment assistance programs. There's no strings attached. There's no second lien. There's no hidden secrets about what you need to repay this money. These are a gift, a grant given to you, no repayment at all. Okay. Then there's loans, which are typical of down payment assistance programs. A traditional loan will assist you with down payment, and you have to repay back this loan. Sometimes it's a repayment on 10 years, 15 years, 20 years. Sometimes they're deferred for the life of the loan. So we'll cover some of these items on the programs and the 3 programs that we're going to share today. And of course, there's many other programs that have different criteria, but some down payment assistance are in the form of a loan. Okay. Some of them are also a forgivable loan. You know, some loans are forgiven depending on the specific conditions and needs on the particular loan. And these can apply for some of the city programs. So some city programs, these loans are forgivable and they have their own terms. Every city will have their own terms on how this loan will be forgivable depending on your criteria, income, and the amount of time that you stay on the home. Okay. One example is that if you live in the property for 5 more years, the loan balance would zero out. We have to be very specific on which county or which city is offering this program. Okay. Then let's talk a little bit about deferred loans. Deferred loans, that means there will be a second mortgage. You will owe the money, and it works like a student loan. It is deferred. On these deferment loans, they are deferred for the life of the loan or when you refinance the mortgage or when you sell your home. And again, these types of criteria will be very different depending on the down payment assistance program that you are going to qualify for. And then we have gift, right? There are some local nonprofit organizations that will gift you the money and you don't have to repay back the loan. Okay, so some of them, they require a gift letter or documentation from nonprofit organizations. Gift funds can also be from your employer, so that can be in a matter of assistance. Some corporate jobs also do help with down payment assistance programs as a form of a gift. So these are the 5 different types of down payment assistance programs available to first-time home buyers. So we want to make sure when you acquire a loan, you really want to be specific. Is it a grant? Is it a loan that I have to repay? Is it a forgivable loan? Is it a deferred loan? And of course, your gift. So we're going to cover through 3 different options today, but I wanted to kind of share this with you because there's always a misunderstanding on the type of loan that you're receiving. And this is a very important question for you to ask when someone offers you down payment assistance. Any questions on this, please include that in the chat. Eligibility requirements, they're going to work a little bit different on the program. Some of these requirements are going to be based on income. Sometimes, depending on the type of property that you're acquiring, it's going to be based on different down payment assistance programs. Credit score minimums typically are 620 or higher on some of these products, but today we're going to share with you a really great program that's going to require a lower credit score. And then typically they're also for first-time home buyers. In some programs, you don't need to be a first-time buyer, which is probably why you're here today. We're going to be releasing this new program that you don't need to be a first-time buyer to acquire your second home, okay? And the majority of them are, you do need to have a completion for your home buyer education course. Excuse me for the typo. I just realized that there's a typo on the education course. But typically, most of the programs will require for you to have a home buyer education course. Okay, so let's talk a little bit today about the 3 different programs that will allow you to acquire today and are available, that there's no waiting period for them, that you can acquire for a single family, a duplex, a condo, a townhome, and a manufactured home, and even up to 4 units, okay? Yep, you heard that right. There's down payment assistance programs for up to 4 units. So today's 3 top programs that I chose to highlight, it's going to be our exclusive program, which is our Pathway. This is a new program that it's only exclusive through our company. So if you go online and you Google, see what other bank has it, there's no other bank that has this program but us. And we'll talk a little bit more on this program specific because it's the one that has the majority of the flexibility with income, credit, and type of property that you could acquire. Then we'll talk about CalHFA loans, the types of different programs that CalHFA has available today. These are great programs. I'm a big advocate for CalHFA loans as well. So we'll talk on this one because we want to see options, right? When you talk about down payment assistance, you want to know, is this program the right one for me? You want to have options because not everyone fits into one product. So maybe CalHFA would work for you. Maybe Pathway, maybe GSFA. So we'll talk a little bit about those programs and compare them to see which one is the best one for you. So 3 main programs today we're going to be talking about. Okay, so let's jump right into our exclusive program, which is our Pathway Down Payment Assistance Program. This is an exclusive APM product. It is a national product. So if you want this program out of state, we do have it available. We utilize all of FHA guidelines. And what that means is that we are not going to have any overlays. What overlay means, no restriction, no additional income limitations. Our debt to income ratio is going to be based on our automated system. If it approves it up to 55% debt to income, you are going to qualify for the loan. Okay. So there are 2 loans with these programs. There's the first mortgage, which is the big loan, and there's the second lien, which is the down payment assistance. The down payment assistance second will allow you up to 3.5% or 5% in down payment assistance funds. These are eligible for purchase transactions, and it is a repayable loan and a 10-year term. Okay, so just keep that in mind if you're making notes. You do have to pay the DPA back in a 10-year. I'm also going to share this slide in the presentation with you for everyone that joined us. So if you're not taking notes, don't worry, we got you. You can replay back this video. It is amortized over 10 years, and it's a fixed interest rate, and it's 2% higher than the initial first mortgage. So for example, if today's rates are 6.25%, the second mortgage would be at 8.5% and a 10-year mortgage, which is cheaper than any credit card out there. It is a really great deal, and I'm going to share with you an amazing story. And soon I'm going to be sharing this testimonial out with my audience because there's been amazing families that just closed transactions with this program. The type of loans that you can acquire with this program, it's going to be purchase only, like I mentioned. It is for primary residence. 1 to 2 units you're allowed. So if you're looking into buying a duplex, this is the perfect program for you. It is not eligible for 3 to 4 units, only for 2 units. You could purchase a condo if the condominium is FHA approved, or we can acquire a condo FHA approval, which is we will collect additional documentation. If that is the case for the condominium, we will talk to you about what those requirements look like. You can also purchase a townhome or manufactured home. Okay, so you're not limited to just residential. You can actually do different types of primary residence. Here's the big one. You only require a 580 credit score for this program. Okay, the max loan to value will be with FHA agency guidelines, which is 96.5%. So we'll require 3.5% down payment. Another big highlight is it does not require any income restrictions. So other programs do have income limitations, so it stops you from qualifying for down payment assistance. This particular program won't. So it's a great program. You want to take advantage. There's no high balance loan amounts on these programs. We're staying under conforming loan limits. It is available in all states with the exception of New York. We talked about the repayment. After closing, you will not be able to subordinate the second, meaning that you cannot refinance for up to 36 months after you acquire the home. However, if 2 years from now or next year you have your down payment, saved, and you want to pay off that second mortgage to refinance, then you can pay off that second mortgage at any time. There's no prepayment penalty on that loan. Okay, so next year you have extra cash, you want to pay it off to have an opportunity to refinance, you're more than welcome to do so. Okay, so if you have any questions on this program, just put it in the chat. We're going to go ahead and continue to see some examples about the program. So here's some examples how the DPA program pathway works for you. If you're purchasing a home with 600,000, a typical FHA loan will require 3.5% and about 2 to 2.5% towards closing costs, depending on the month that we close your transaction, because there's higher taxes are due later in the year. So let's just talk about this example, on a very conservative 3.5%, 2% closing cost. Your out of pocket would be $34,000. Your monthly payment would be $4,602. Your down payment required would be $21,000. Your average closing cost would be about $13,000. So your total out of pocket would be $34,000. Okay. Well, if you use the pathway, let's say you do have money, but you're buying a property that needs a lot of repairs, that needs a roof, that needs a new driveway. Maybe you want to redo the whole kitchen. Saving $21,000 towards down payment, you can redo that new kitchen. You can upgrade your bathrooms. You can use that money now and get a second mortgage and in the future pay it off. 8% is a lot cheaper than any credit card or any credit union that's offering you direct consumer loans to do these repairs for future homes. So it is a great interest rate. It's not going to impact your monthly payment that much. You can pay it off at any time. So if you want to compare that, if your monthly payment is $4,602 in a traditional loan, with this program, your monthly payment would be $4,859. This is a perfect scenario, especially if you're buying a duplex. If you're buying a duplex, you have a renter, that's going to help you offset your mortgage, right? And maybe you don't have all the money to buy. Maybe you need to renovate that second unit to be able to rent it out for a better price. So this is when the program works the best. In this case, you would only come out of pocket $13,000. And remember, I talked to you guys about sharing a testimonial and a story about a few families that we just closed with the DPA. Well, not only did they buy a duplex with this program, not just no money down, but they received a refund for their initial deposit because the seller paid all their closing costs out of pocket. In addition, the seller also helped them buy down the interest rate. That way they're able to get a lower monthly payment. They are also receiving additional funds for their closing costs. So they were able to match with points their initial monthly payment because they received a lower rate. And what happens when you receive a lower rate in this program, not only is your monthly payment here impacted and lower on the first mortgage, but also your second mortgage becomes a lower rate. So your repayment overall, you have a huge savings. So in today's market, if you're seeing in your area that inventory is staying there for a little bit longer than usual, 30 days, 45 days, and you come in with a good, strong offer using this program, and you're able to negotiate closing costs, chances are, like these families that we just closed the transaction, is that you're going to come out with $0 out of pocket, and you're going to be comparing your loan just like a regular traditional loan. So let's take advantage of this time that we're starting to see a little bit more inventory. We're starting to see favorable rates. Interest rates are dropping, but this program can favor you and work for you. So that's a little bit about DPA. This is exclusive to our company. No other bank has this program. So if you are trying to apply somewhere else, no one's going to have the DPA pathway, but only APN. So we look forward to connecting with you if this is something that you are interested in. Okay. All right. So we're going to jump into our second program. If there's, this really simple program, I think if you have any questions, just let me know. But we'll jump into our second program, which is our CalHFA product. Our CalHFA product has been very popular, especially in the last couple of years because of the Dream for All program. A lot of our clients were very fortunate and they won the lottery. I think we've got a total of about 23 of our families have been able to receive the money, the vouchers. Plus, we have still people in the waiting list, and there's some that were in the waiting list, we're number 800, and they're starting to receive their vouchers. So if you're one of those, let's not lose hope. The voucher may be available for you. Will the Dream for All program come back? We don't know. If you haven't heard, which is going to be a new announcement, so if you join this webinar, there's a new announcement from CalHFA that's going to be announced on August 19th with most lenders. We're going to be emailing and announcing it tomorrow. But CalHFA will allow you to refinance your mortgage now. Okay. In the past, that mortgage that you received with CalHFA, it was not allowed to be subordinated. But now, even with the Dream for All program, it will be allowed. With CalHFA programs, it will also be allowed. So that's a really great benefit for consumers, especially in today's environment where the market is starting to look a little bit different. We're starting to see lower rates. So will rates become lower next year? If they do, you don't want to get stuck with the current interest rate. You want to be able to have the flexibility and the opportunity to refinance through some of these mortgages. So CalHFA did launch the refinance program that it's going to be open and available to anyone that purchased in the past with the CalHFA loan effective August 19th. So if you are here, you were able to hear the news. We're going to be announcing the news the day that the program is effective next week. So down payment assistance programs with CalHFA. Let's talk a little bit about this program. Interest rates are lower than average. I see that as the biggest benefit to most of our products. Today, CalHFA, it's 6.125% for FHA loan versus like your average 6.3. So it's a quarter difference better. Also with conventional loan condominiums, the interest rates are very favorable. So those are some of the things that you want to make sure that you look into. Rates are posted daily, so you don't have to check in with me. You can go to CalHFA's website to check in the rates on a daily basis. The programs do require a higher credit score than our Pathway program. So if your credit score is 640, you're eligible for an FHA loan, conventional 680. However, if you meet the lower medium income qualification, you only need a 660 credit score, okay? Max debt to income ratio is 50% if your credit score is 700 or higher. If your credit score is below 700, the max debt to income ratio is only 45%, okay? The payments are deferred. So we talked about the difference between grants and loans and deferred loans. Repayment loans and loans are deferred. CalHFA is a deferred payment loan, okay? It's deferred for the life of the loan, or when you sell your home, you can repay back the mortgage at any time. There's no prepayment penalty, no added fees for you to pay off that second mortgage. There are income limits, which are very favorable. In comparison to Pathway, it has no income limit. This one does have income limits, and I will share those with you. Income limits are also posted on their website. You can look at the county you are wanting to buy in and look at the income limitation. Now, the income limitation, it's not where you are currently living, okay? The income limitation, it's where you are going to acquire the property. So make sure that, if you're moving to Orange County and you're making more than LA County's current limit, look at Orange County limits, okay? So don't get confused on that. Unlike the other program, CalHFA, it's only eligible for single families, condo, townhomes, and manufacturers. They do not lend on duplex. Now, on single family residence, if the property has an ADU, you can definitely use the program, and we can use the rental income from the ADU to help you qualify for a home loan. Okay, so these are just some of the highlights on that. Once you apply with us, we're going to make sure that you're meeting the eligibility for the down payment assistance programs. But these are just some of the top of mind things that you want to know if you're eligible for this program. County limits. I'm going to share with you a little bit about county limits. If you're in LA County, if you're moving into LA County, your income cannot be higher than $211,000. If you're in San Bernardino, 205, and Orange County, 270. If your counties are accessible online, so you can, chime in and take a look at if you're eligible for any of the counties. So this doesn't mean you have to make $210,000. This just means you can't exceed $210,000 for the county that you are moving into, okay? Everyone that applies, everyone that has an income, it's part of the income limitation, okay? Remember, the program is for first-time buyers. Everyone must occupy the home. You cannot have non-owner occupant co-signers. You could not have owned the home in the last 3 years. Okay, so those are really important things that you need to keep in mind. For CalHFA, yes, if you must meet income, credit, um, DTI qualifications, first-time buyer qualification, everyone that's on the loan must qualify. If you're bringing a non-borrowing spouse into the loan, we could bring her into the loan, but she must meet the credit score criteria to participate on the program. Okay, so if you have, any other questions or anything that it's, beyond this, just let me know and we can discuss. Every situation is different. I always tell everyone that every family, every household, every credit, every income that we look at, it's completely different. There's not one fits all product. This is why having different options and flexibility in products that may be something that you can participate, it's really important. Okay. All right, so let's dive into our third program, which is our GSFA program. GSFA it's a little bit, there's more programs that are available through a GSFA. It's been around for many years. Why do people not really look at GSFA? I think, one of the myths that we have with GSFA is that they feel like interest rates are higher, the cost of the loan, it's expensive, the closing costs are higher than usual. Um, when we compare all the programs, we send out our clients different options. Along with those options, we provide 3 different estimates because you want to know which estimate is going to be the better monthly payment, the better out-of-pocket cost, right? And you want to also know which one has the lower fees, right? And of course, if you fit in all 3 of them, now it's just going to be a choice what you're looking into buying, what type of home, what your DTI is. But GSFA, it can get a little bit overwhelming when people see the information, and you're going to see why. But I'm going to tell you something that's really unique about GSFA, as I promised when I promoted the event, is that this program allows you to buy your next primary residence. You don't have to be a first-time buyer for this program, unlike the other programs you do. This one, you don't have to be a first-time buyer loan. So if you own a home and you want to keep your home and rent it out and buy another home, this is the program for you, okay? If you co-sign with someone and you don't have proof that someone else is making the payments and you want to buy another house, this is the program for you. If you work for certain, government agencies, this is the program for you. If you're depending on your career, this is the program for you. So we're going to talk about the 3 different programs through GSFA that are available for first-time buyer. The Platinum Standard is our traditional one. This helps the majority of home buyers by offering up to 5% of the first mortgage assistance through a 15-year repaid fully amortized second mortgage. Okay, so this one, it is a repayment one. The interest rate is the same as the first mortgage for the second loan. So unlike the pathway has a 2% higher, okay, and we're going to start seeing the difference as we talk a little bit more about the programs. You're going to refinance, you are eligible for the 15-year mortgage at the same rate as the first mortgage. So that's a plus, okay? And that the majority of the clients can qualify for a Platinum Standard. Then we have our Platinum Select. Our Platinum Select are for home buyers who are working in public safety, medical industry, educational roles, police officers, firefighters, teachers, healthcare workers. The loan is the same as their Platinum Standard with the difference of an additional 1.5% gift funds. That is a grant, free money. When you see the word gift, grant is free money. So if you're in that sector as an educator, a nurse, public safety, this is the program for you, okay? The first mortgage, again, it is a 3.5% down payment assistance, right? For the second mortgage, it's going to be amortized over 15 years, just like our Platinum Standard. But there's an additional gift that you are going to receive, and that is not repayable. So if you fall into that, make sure that when you inquire, you say, Luz, I am part of the Platinum Select group. Can you offer me that program and provide an estimate so I can compare them? Okay, so we typically ask, we see right away in your application what your career is, what position you're in, and we're going to go back to you and say, hey, you're eligible for a Platinum Select program. Is that something that you want to select? Is it something that you're looking into? And we're going to offer you that estimate to make sure you're comparing them apples to apples. All right, let's talk about our third program, which is our Platinum Assist to Own. These are available for employed GSFA members. So these are just some county members that are eligible from this. The list is really long. So if you're employed by a government agency and you are working in, let me know what county, LA County, Orange County do not participate. Let me know, because the 3.5% assistance program, it's 0% interest on a deferred second mortgage. Okay. And then you can receive up to 2% additional gift. Okay. So additional key points again for these programs, there's 3 of them, right? One of them will be our traditional Platinum, that it's broad, everyone can qualify for it. And then we have our second program, that it's our Select, which is for anyone in education, nurse, there's, educational occupation will bring you to that program. And then our Assist to Own if you're a government agency employee on the counties or participate on this program. So don't forget to let me know if you are a government employee, to make sure that you let me know which county you're working in so you can participate on these programs. Okay. It is not a first-time buyer requirement, like I mentioned earlier. Everyone is eligible to qualify for this loan. Both first-time and repeat buyers can purchase with this program. Okay. Let's talk a little bit about the credit. The minimum credit score is 640, 660 for manufactured homes. Your DTI can be up to 50%. Some programs might allow a little bit higher debt to income ratio. We use them under FHA or conventional VA loans. You can do 1 to 4 units on these programs, depending on your income, and also depending on the, if it's 3 to 4 unit, we need to make sure that there is a repayment cost for that when we calculate on conventionals. Also, income limits, we'll share with you the income limits. There are some income limits for these programs. Unlike the Pathway, no income limits. CalHFA, very favorable income limits. GSFA has their own income limits. Okay, so going back to the different programs, every program it's going to have an income limit, but you don't have to remember any of this. This is not something that for you to memorize. This is where we come in. This is when we're going to know which program it's the best one for you. Okay, so these will have income limitations by county and also depending on the program. So here's some comparison. That's, I put them side to side just so we can compare the programs with GSFA, because it is a lot of information for GSFA. Again, like I mentioned earlier, when my clients go on GSFA and look at this as an option, they're looking and they're just, flipping through a lot of pages and not really understanding the program. I will have a workshop dedicated just for this product in the month of October with Freddie Mac and GSFA, talking more about Freddie Mac's one program, which is also a great product that's available along with GSFA. So stay tuned for that event if this is something that you are looking into. But some comparison is going to be on the standard. You can get up to 5%. It's general for all home buyers. The Select, it's 3.5%. You can get up to 5%, and 1.5% will be the gift, which is the grant, and it's best for public safety, healthcare, education professionals. The Assist to Own, it's a deferred loan and a 2% gift, and these are for county employees in GSFA member counties. Okay, so check in with me if you fall into that. So the loan types of loans are also going to be different. We're going to be able to offer them under FHA, VA, USDA. Also conventional loan. The FHA has no income limits for all FHA loans, but conventional loans, they do have county limits. So we have to look them up to make sure that you're able to fall into that. And our 3 to 4 units will fall into conventional. So we have to make sure we're careful with the income limitation on that. Okay, so we'll check up on that if you are interested on 3 to 4 units. All right, so here are some county limits. LA County, GSFA 196,000 above 80%. These are the unconventionals, okay, not FHA. CalHFA, just an example for LA County, conventional loan for Orange County, CalHFA for Orange County. So it's just a side-to-side sample of what those limits look like. Benefit of down payment assistance programs, let's kind of cover. I know we covered a lot of information. Again, we're going to be doing a lot of the work for you. I just wanted to highlight the difference on these three products that are available for you. There's no waiting for them. You don't need to apply separate than just applying with us to be eligible for these products. Some of the benefits is going to reduce upfront costs. It's going to make homeownership achievable for low moderate income buyers. It's going to free up some of your savings, right? You don't need to use up all your savings to buy a home, right? You want to have some reserves, especially in today's economy. You want to have some money saved in your bank account for any repairs, anything that comes up as a first-time buyer getting into a home. There's extra things that you need to be responsible for. So why not go in, save your money, go into the property, feel like what it's like for the next 6 months. And if you think you don't need to use that money for anything, pay off that second mortgage and don't have any of the outstanding debt. So these are some of the great opportunities that you have available. You know, it stabilizes financial. I always say, like, the more you have saved, the better you're going to be off as a first-time buyer. You're also going to, if you have your own money and you want to put more money, your equity, you're building a lot faster. Your monthly payment can improve. So you don't need to just depend on the down payment assistance programs. You can add on additional funds to any of these programs. Okay, so you're not limited to how much money you can put an additional to these programs. So here are some of the items that you need to qualify for a home loan. Now that we covered 3 different options, now that you know about what kind of programs are eligible for you, let's talk a little bit very briefly on what you need to apply and what you need to qualify for a home loan. Different types of, income, it's acceptable. Same line of work, it's preferable. But if you had 3 or 4 different jobs, that's okay. Especially with COVID, there's a lot of job gaps that we're seeing. Also, too, with businesses closing and you're transferring to a new company, that's also okay. We want to see 2 years tax returns. If you're a W-2 employee, that's all we need to see is W-2s. If you're self-employed, we want to see your tax returns. If you own a business, we want to see your tax returns along with your business taxes as well. We do need to see, for a business owner, your license that you've owned a business for the last 2 years. So these are just basic information for employment. You could use other income like IHSS is a form of income. Social Security is a form of income. Your retirement, if you have interest-bearing income accounts, if you have, if you're retired and you're receiving funds from distributions, that's also a type of income. So income comes from different variations, not just W-2 or self-employed. So if I didn't name some of the incomes in this list, and there's another source of income that you're receiving, please let us know. Section 8 income, it's also part of this. I forgot to mention as well, spouse support, child support, all those are part of the income and can be counted towards your qualification. So if there's any kind of income that you receive, please run it by me. I don't want to say no. We always ask our underwriters because we're surprised sometimes we've never heard of that type of income and we're able to use it. So please check in with us when it comes to income. And if your income, it doesn't fit with this traditional loan, we do have another alternative options for self-employed clients, 1099 employees, that we can use to qualify for different types of loan. Unfortunately, there's no down payment assistance programs for non-traditional loans yet. Could they be in the future? We are staying hopeful. Assets, we want to verify, where your closing costs money is coming from. So we want to see a bank account. If your money is coming from retirement funds, that's also acceptable. It can be in your checking, savings, stocks, mutual funds. It can come from a 401k. It can also be a gift. Okay, so gifts are acceptable in most programs. It has to be a family member only. And we want to make sure that depending on the program, on FHA loans, we need to paper trail the gift. On conventional loans, we don't paper trail the gift. So If I didn't cover a type of asset, please again let me know and we will find out for you if we can use those funds. But these are just some basic stuff. We're going to need to see 2 months bank statements. If you're interested in applying, when you request an application, we will send you a list of items that you need to upload in your application. Okay, now that we share a lot of great information, the application process is first connecting with us to make sure that we are, providing you the correct down payment assistance program information. If we didn't mention something, it's our job to research and identify the right program for you, and that can be either a state or local programs. We are the first ones to know which programs are going to be launching in different cities. Just today, I was reached out by 2 cities in Orange County that are going to be launching a new first-time buyer assistance program, and we're going to be part of the pilot program. We're hopeful that we're able to share that information with you guys soon. So we're going to be researching for you. We're going to know where these programs are going to be available and what the criteria is for the program. We're going to determine eligibility on these programs to make sure that your income, location, your credit profile matches the product. And step 4, you're going to submit the documentation to include, verification, tax returns, and credit reports. And once we issue the pre-approval letter, then you're going to complete your home buyer education. If you were one of the participants that received our discount code a couple of months ago and took the education course, great. That course is valid for up to a year. If you have not yet taken the course, we can send you the link with your application pre-approval where you can participate for that program. Our pathway program, you don't need to participate in the home buyer education course, so keep that in mind. You just need to do a very quick online 15 minutes presentation that talks to you about how the program works. Okay, so we are getting towards the end. I just want to share a little bit about some misconceptions about the programs that we hear a lot. And this morning, I had a conversation with the listing agent before they're accepting an offer of one of our clients, just having this misconception about how these programs require a second appraisal. If these programs take longer, do they need to relieve the seller home inspection? So there's a lot of myths about these programs that unless you are part of this workshop or, gone through the process, then you don't know that these programs are very simple to close and they don't require additional time. So DPA programs are not for low-income families only. So that's one of the biggest myths. People think they can't make up to $200,000 to participate. And as you've seen through this presentation, you can participate on this program if your income limit is higher than the average AMI income limitations. So the fact is that many programs do cater to moderate income buyers too. However, it's not just for moderate income buyers, okay? And like I mentioned earlier, it's too complicated to apply. I feel like the program is going to take longer. There's more of the application process. I don't want to fill in more paperwork. You don't have to. With us, we're going to guide you through the process to make sure that it stays as simple as possible. Please feel free to read our reviews. We have a lot of clients talking about their experience with our DPA programs and our team. Okay. Another myth is that assistance funds are always loans. As you can see, there are some assistance programs that are a combination of loans and grants. And if you are looking just for specific grants and not loans, we are going to be hosting a workshop just on grant programs. The grant programs are, yes, a little bit lengthy, more processed. They're not first come, first serve. They're not always available like these 3 programs that I mentioned. There is a waiting period and there's not guaranteed. Okay, so there's certain criteria, and typically they are for lower moderate income buyers, the grants. Okay, so that's something to keep in mind. All right, so with that, we are going to wrap it up. So we're here to assist you. I don't see any questions. Well, I do see some questions here. We're going to answer some questions that we have. So one of the questions is, to buy out a state, does it have to be primary residence? Yes. So if you're using the program to move out of state, it has to be your primary residence. So it works perfect for someone that it's going to relocate to a new state. So we can use the program with the relocation letter from your employer. Okay. Dan, what does it mean for no high loan balance? That just means you can't exceed the current conforming loan limits of 800,000. So anytime that it goes beyond that, it's considered high balance. And that's not for all products. So CalHFA does lend, okay, for high balance loan amounts. And what I'll do, Dan, I'll write here, I have your chat, I will send you what those loan limits are. So if you're above the loan limit for to qualify for a pathway program or a GSFA program, then we are going to work with CalHFA. So again, going back to not everybody fits into the same criteria of the program, right? Okay. So another question is for Tina. So with the second, you can't refinance until you have paid off the mortgage loan. That it's going to depend on the program. Like I mentioned, with CalHFA, you are able to refinance the second mortgage to reduce your monthly interest rate. And that was released this month, and it's going to launch on August 19th. So we will see a lot of refinances in the last couple of years that people had a higher interest rate. So if you know someone that used the CalHFA program, have them reach out to us. We'll look into the application process for the refinance to CalHFA. So that is a great news for all first-time buyers that with our CalHFA product, you will be able to refinance and subordinate the second loan. Other programs, you do have to repay back the second mortgage. With some of our programs, like our Pathway, after 3 years, you're able to refinance as many times that you like. Okay. Is this loan good for an ADU? Yes, you could buy the house with an ADU, and we use the ADU income for the income qualification. So often an ADU has helped many homeowners acquire their property because that helps them qualify for a little bit more. And if we're using some of our conventional products, we can also use boarding income. So if you have someone that lives with you for the last 3 years and has paid you rent by occupying one of the rooms that you live in, and you can prove to us that they're going to move in with you. They don't have to co-sign, they don't have to apply with you, but they're going to move in with you in the new home. We can use boarding income in some of our conventional products, okay? So, that's something that often lenders do not cover, but boarding income is acceptable in some of our conventional products, okay? How do you know if you're on the waiting list for Dream for All? So if you applied for the Dream for All program, you want to go into your portal and check in there if you were denied or if you're on the waiting list. And then if it shows on the waiting list, there should be a number there. If you need help navigating through that page, reach out to us, set up an appointment. Just my calendar, it's live every day. So you can just book in a 15-minute consultation with me, and then we can help you find that information. If you have no way of getting into your portal, let me know. We'll reach out to CalHFA and help you get access to your portal. Okay. Is limit on single or married? So the limit is going to be based on who applies for the loan. Only the people that are applying for the loan are going to be part of the income limitation. These are all great questions. Thank you, everyone. Would GSFA also apply to city workers? Yes, so if you're working for a city, okay, depending on your position, GSFA can work for you. So make sure that you're checking in with us, that you're a part of the GSFA Select program to make sure that you're eligible for the grants. So you don't want to skip on that grant. It's 1.5% free money. I'll take it. Okay, so make sure you're checking in with us on that. You said LA County employees are not allowed. No, so some government employees are allowed for the GSFA programs. That is for the deferred programs and for the 0% deferment and gift. So depending on your position, doesn't matter where you work, which county or private entity, your position will be able for you to be eligible for the GSFA Select program, okay? If you're working for Pathway or if you're looking for CalHFA, it doesn't matter where you work, you are going to be able to participate on the program. Okay, so again, it can get a little bit confusing because there's so many layers for GSFA. But the fact that you work for county or any jobs, you're eligible for any of our products. Okay, even with GSFA, just not for the select programs. We have to be very specific and make sure that we're meeting the requirements. Thanks for that question. Okay, what with DTI, what is included in your debt to income ratio? So what's included with your debt to income ratio is going to be your mortgage, which is your future housing expense, and any credit cards, any auto loans that you have, and any student loans that you have. We do host first-time home buyer workshops that all we do is cover all the steps and what DTI, credit, income, buying, home inspection, appraisal, collateral. We go through the whole process of what you need to know as a first-time buyer, and we cover very lightly on some programs. Today's seminar was specific in covering 3 different down payment assistance programs. But your debt to income ratio, it includes your mortgage and any debts. And student loans, of course, are going to vary depending on the type of student loan that you have, whether it's deferred, whether you have a repayment plan, and we'll talk to you about those options when you apply with us, okay? Is there somewhere that you can meet with us face-to-face? Absolutely. We're located in the city of Downey, so you're more than welcome to set up an appointment with us. We also do Zoom consultations, which often our clients find it very convenient, especially you don't want to drive in LA and through Orange County. But if you'd like to come in, please feel free to set up a time to work with us, okay? Which are the 2 cities in Orange County that reached out? They are going to be announced pretty soon. They're still working on them, Monica. So we will be announcing them as soon as we have permission to release them. But currently, just to let you know, City of Santa Ana has programs available. We want to circle back with Garden Grove as well. They did stop the program. We do work with them and we're in communication with the City of Garden Grove, and they are looking into relaunching their program pretty soon towards the end of the year. As soon as we have that, if you're part of our database, which you are now, we will send that information. So anyone that's part of our database, we send out information the moment we're receiving these announcements and that we have the permission to release them to our audience. So we do keep, a list. Again, the advantage of being in our database is that you're going to be the first one to find out. And if you're applying with us and we know your criteria and where you desire to live into, we're going to group you. We're going to know like these are the cities you want. And the moment the program launches, you're going to be the first one in line to apply. So that is the key point for having these applications in, which is what happened with Dream for All program. We launched these webinars. We announced it. We had clients from the year before that were already part of our database, updated their information with us, submitted their application, and they were able to take advantage of the Dream for All program when it launched. So you don't want to stay behind. You want to stay ahead of the edge by applying with us and staying present and staying on top of these products that come, because they come and go very quickly, okay? Can I get income limits emailed to me as well for CalHFA? Absolutely, Christina. We'll get those over to you. Another question. Oh, thank you, Ricardo. We'll send you over the information on CalHFA. So Xian, these programs let you buy land to build a home. Unfortunately, we are not, there's no down payment assistance programs for land loans. We do have some land construction mortgages available, but not with down payment assistance. So if you are interested for land loans, just reach out to me and we'll send you the information that we have for our land loan programs. All right. Shirley, thank you. So thank you, everyone. I think that was all the messages that I received today. If there's anything else that you guys would like to ask, any questions, please, I'll stay here for the next 5 minutes. These were all really great questions for everyone. I promise that we are going to do our work to make sure that you're able to qualify for some of these products. It is a lot of information. So we'll, try to, do our best in our consultation just to cover what you're interested in, and we'll keep you posted on any new programs that are launching in the time. But there's a lot of great programs. We are looking at a better landscape for first-time home buyers, which is like what I love. We're looking at more inventory, better interest rates, better negotiation when it comes to seller giving us closing costs, and that helps us a lot with our interest rate. It puts us in a better position when it comes to purchasing the home. So definitely a lot of great news for first-time home buyers. We're here to help you. And this slide, feel free to chime into our QR code, download our app, visit our website. Our applications are in Spanish and English as well. Let us know how we can assist you. Book yourself in for a consultation, and we look forward to seeing you in our upcoming seminars that we're having. We are going to be putting them on our website in the next couple of weeks. There's going to be about a total of 6 different workshops in the next 3 months coming up that will be of your interest if we did not cover something in here. Okay, thank you. Yes, I will let you guys know on the 3 units. So I send you my information, my email's there. Please send me an email asking for the specific program that you're looking for, your situation, and I highly recommend that you apply online so that way we can better determine if you are eligible and qualify for any of these products. All right. Well, thank you everyone for joining. It's 6:56. Thank you for staying on with me for so long. I look forward to seeing you in our next event. Thank you.